All right, good morning. Welcome back here to Trader Money. Great to have you aboard. We're about a little less, about 50 minutes away from the market open here this morning. And, Monday morning, coming off of last week. And, last week was characterized by this idea that, hey, a trade deal between the U.S. and China had been reached. And both sides touted this 90% done. We're 90% in, we're 90% done, 90%, 90%. From China, from the U.S., we kept hearing this 90%. All we have is this last 10%. Well, some of the biggest issues are in the last 10%, and the market's been looking for for insight into that and when that is going to happen. It hasn't gotten any of that over the weekend. There hasn't been any kind of new developments, any new information coming out from from either side, the U.S. or China, on that last 10% and when that's going to happen and what the next step is and all of that. So the markets are in a little bit of limbo here with that and with that kind of magic pill of a trade deal here. No real new information on that. You can see where S&P futures sit relative to where they've been over the last 3 weeks. They're near their highs. S&P futures are indicating about a 4-point gap lower this morning in the market. But you can see what that looks like. It's very minute, very small, and something that can easily get erased, in a very rapid fashion. We did see a little bit of weakness overseas here last night. In fact, here we just kind of go look at the Asia markets here. Let me pull them up. That's an interesting headline here on Market Watch. But you can see the Hang Seng, traded on higher, but Shanghai slightly lower. Singapore slightly lower. India slightly lower. Japan just fractionally lower. So lower as the lower as S&P futures are lower, just to a very small, very, very small degree. Now, one change we are seeing here overnight is in the euro versus the dollar, and you can see the euro, versus the U.S. dollar, and the move here. Let me highlight it. This is the move right here that we see last night. It's not one of these kind of super small, can't see it types of moves. There's some movement here. It's coming off of this kind of head and shoulders basing pattern that we see coming into the hourly chart. Since the Fed crushed the euro and strengthened the dollar, or however you want to put it. The Fed reaction from back about a week and a half ago. But euro continues to strengthen here this morning, and that's putting some strength in, a little bit into oil, a lot of bit into gold as gold recaptures that 1,300 level again here this morning. So we are seeing that, happening here, and that's one of the bigger moves, out there. We're also seeing a lot of analyst action for a Monday morning. A lot of analyst action, and here's just a little bit of it. Some of the biggest headlines are General Electric. General Electric downgraded here to underweight from market weight. Now, my apologies. Now you say, well, what's going on? Well, the analyst who downgraded it is what's going on. It's J.P. Morgan, and it's the analyst that had been right on the entire decline on General Electric. And, later last year, he removed his sell rating, and now he slapped his sell rating back on it, basically, with a $5 price target here for General Electric. So that has General Electric trading down significantly here this morning. We also see Boeing. Boeing downgraded by by, who was it, Bank of America. They downgraded Boeing. They downgraded them to neutral from buy. Looking at the downgrade, it looks like they're just saying, hey, with what's priced in, the story has been the story, and, well, because of that story, we're going to downgrade it. And I would not be surprised to see a few other analysts do that, especially after those small Boeing bounce off the lows that we have seen in the last over the last little while. But we have stocks like Starbucks downgraded this morning. Stocks like Procter and Gamble, upgraded this morning. We have Wynn Resorts upgraded. We have Zillow upgraded. We have Southwest downgraded. Let me show that to you here. Airline downgraded. Just a lot of upgrades and downgrades here this morning. Seagate upgraded. Allstate downgraded. I mean, the list is just really quite heavy. Harley Davidson downgraded here this morning. Wynn Resorts upgraded here this morning. So it's analysts are really chirpy out there here this morning. You say, well, is this normal? Well, yeah, it kind of is right ahead of earnings season. And, Friday, I believe it's J.P. Morgan will kick off this earnings season. And it's going to be a very interesting earnings season, a very interesting one. And it's one where, we're starting to see people talk about it and what's on deck here. Earnings have not been the focus for the market lately. They just absolutely have not been the focus. What the earnings are or what the earnings are going to be is not what the market's been looking at. The market has been looking at the trade deal. The market has been looking at this idea of a trade deal happens. It will cure all market ills. And the market's gone and forgotten about some of the ills. And one of the things that the market's going to have to face in the next several weeks is the fact that earnings revenues are not going to be growing at nearly the same pace. In fact, the revenue growth is expected to be about 4.6%. Now, we've been dealing with the market with double-digit revenue growth. Double digit. That's a big number. The revenue growth has been very strong in this market. And over this quarter, it's expected to be 4.6%. You say, well, that's still growth. And you're right. It's absolutely growth. 4.6% revenue growth is still growth, right? But one of the things we're going to start to hear in the market is this idea of margin contraction. Because revenue growth is dampening this period of real margin expansion that we have seen in the markets over the last 3 years, we will see be diminished and be diminished significantly. Now, the bears are going to argue, look, this is what we see at tops, this is what we see before big bad bear markets, and the bulls are going to say, so what? We have the U.S.-China trade deal coming, so none of it matters because it's going to be a new world after that deal happens. And that's going to be the argument. That's going to be the way the market looks at it, at least for now. But I do suspect that as we go forward here, there will be that sobering element. But at the same time, cannot underestimate the fact that this market looks like it wants to print a new high. It's close enough to print a new high. Has enough excuses to go and print a new high. Will it get there today? Probably not. I would be surprised if it got there here today, just simply because of, the Boeing and General Electric upgrades, downgrades. But, we could still see it. But overall, we do have the VIX up about, 4% here this morning, on a relatively flat open. To see the VIX up about 4%, that's a sizable move, here early on a Monday morning. But anyway, that's kind of the setup here this morning where the market is. I still think from a bullish standpoint, you look at things and you buy them off the prior day's low. And if they break the prior day's low, you got to go. And from a bearish standpoint, well, you need to see some confirmation. If you want to get really aggressive on the bearish side this morning, it's an easy setup and it's a good risk-reward setup, here so far. So let's say you're bearish on Apple. The play is to short it on the open with the stop on Friday's close. That's the play because of where these stocks closed on Friday and closing on these upticks. The play is simple. It's not a high probability play. It's not one of these plays where you go, well, yeah, of course everything's going to fall because there's gap down here. But from a risk reward standpoint, you can make that bet of a further drop without taking a ton of risk here with it. And that's something I'll be looking to do personally here this morning. I showed you the one I'm looking to do it with here with Apple, but I'll step into some short-term puts. Use today's high as a stopping point, set it, forget it type of a deal here this morning. But it's not like what we're seeing in Apple. We're seeing everywhere, right? We're seeing something different in things like AT&T, which is set to gap up. Excuse me, my apologies. You go and you look at Micron. Whoa. Let's see here. I was looking at this wrong. Oh wow. Okay. We're set for a pretty sizable gap down. This isn't something I want to buy a put on and use put a stop on the high from Friday. That's just not a great risk reward. But some of these that have a little bit of a smaller gap, some of your Fords, some of your, even General Motors, Apple, even some of the financials, those are some of the interesting ones here this morning. We saw Ford downgraded last week, held up pretty well on Friday, and then, dipping here a little bit in the pre-market. This is a very interesting spot for Ford, to say the least. But anyway, that's kind of the early morning kind of trade. It's pretty straightforward. It's pretty simple. It's not something I think you need a million technical indicators or a whole bunch of analysis on. It's very straightforward here with that. I still like gold on the upside, very much. This morning we're going to see it, gap above this 7-day moving average after last week. We talked about it, this lower band. So we're going to see it, make that thrust. I'll be interested to see how Goldcorp and Newmont Mining hold up. These are two stocks that, we talked about on Wednesday, strong buys, and stocks that Thursday morning was lower and Friday morning was lower. And they just kept tracking on back, and they kept seeing buy pressure come in. And I do expect, that we will see more buy pressure come into these names, over the course of the next little while. Over the next weeks and, over the course of the next months here when it comes to gold. Now, this week, going to do a couple things. Tomorrow, we're going to break down to an earnings season preview and show you some of the things I'm looking for, some of the dangers, some of the possibilities, some of my favorite plays here when it comes to this earnings season. Show you some of the ones that I'm playing. And then on a Wednesday, going to roll out and show you the last stage of what's hopefully the last stage of testing for the trade automation that we talked about on Friday. So we'll be rolling that out, and we'll be talking very specifically about that. A lot of questions have come in over the weekend with that. So I'm going to defer answering any questions until Wednesday, until kind of I show it and show what's going on there with it. And I will make sure that each and every question is responded to there in that. The bottom line is, it's not something to replace Jeff and pull Jeff out and to make it so Jeff isn't involved in Trader Minute. That's not the case at all. And I think that is one of the that is definitely one of the things that was sent in there, or that was sent in here this morning. Was a concern for that, but I promise you that will not be the case. I will still be highly involved, and in fact, no matter how automated you want to make an algorithm or something, there still has to be a little bit of human intervention. I'll show you where that has to be. Here with what has been developed and what is continuing to be developed here overall. Okay. Thanks for hopping on. Have yourselves a fantastic day. I'll jump on here in about a couple hours. Take a look at some of the setups that are happening. Again, it's to me this morning's about the gaps. And hey, you buy puts on the downside gaps, and you run with those with the stop on Friday's highs, and I'll start to look at some of the more daily action type of setups that we see out there, here in a few hours after the Monday morning, action kind of settles out a bit. Again, thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.